Last week, many of the business leaders from around the world met to discuss the health of the global economy. And there was one concise message that came from that meeting. And spoiler alert, it wasn't good.
There wasn't much change to the U.S. markets last week, with the S&P 500 being the only one that was negative, and it was only down 0.2%. Now, the S&P 500 is up about 6.3% for the year, and the Russell 2000 is leading the way, up just under 10% year to date. Foreign and emerging market stocks were also positive last week, with emerging markets being the front runner, up about 1.5%, and now emerging markets is up over 8% for the year. The chart that we're looking at today is of the Semiconductor Index, and semiconductors consist of the inner workings of the electronic devices that you use on a daily basis. Now, looking at the chart, I want to focus on the blue line to the right of the chart, and that's been a clear resistance level in this index that we've seen since October of last year. The semiconductors closed right at this resistance level on Friday, so we were interested to see if the semiconductors would continue this momentum and finally break through that level in the coming week. However, one of the largest companies in this index came out before the market opened on Monday, lowering their guidance and also saying that they've had a negative effect on their sales due to the slowdown in the Chinese economy. This negative news led to a sharp sell-off in the entire index at the open on Monday, and it's looking more and more like a rejection at this level once again. I mentioned before when I talked about the semiconductor index that this could be one of the major indicators of the overall health of the economy. So a rejection at this resistance level does not bode well for the market as a whole.
The World Economic Forum was held in Davos, Switzerland last week. Now, this meeting is comprised of approximately 2,500 of the top business leaders from around the world, and they meet to discuss pressing issues about the global economy. Now, most of these leaders provide interviews and insights throughout the four-day event, sharing their outlook for the future. And the overall thought for 2019 remains split in regards to if there's going to be a global recession or if we're going to see continued growth. But almost all of them are looking at 2020 as the year that the recession is going to hit the globe. And they're citing out-of-control debt levels, interest rates, and trade tensions as the main three things that cause this. Also last week, President Trump signed a bill to temporarily open the government until February the 15th. Now, this may not be major market news, but what is important is that there was a scheduled meeting Thursday and Friday of this week between the United States and China to continue trade negotiations. And now that the government is back reopened, this meeting can continue as planned. And lastly, as of Friday last week, 112 of the 500 companies in the S&P 500 have reported their fourth quarter earnings. And so far, year-over-year revenue growth is sitting right around 14%. But companies aren't beating expectations as much as they have in the past. But that could all change this week as 25% of the S&P 500 reports their fourth quarter earnings. So this week is going to be make or break for outlook on 2019. Not only is this going to be an important week for earnings, but we also have a Fed policy meeting on Wednesday. Investors are going to be watching closely to see what the Fed has to say about interest rate hikes and also the tightening of their balance sheet.
It'll be interesting to see what the Fed has to say on Wednesday, especially after the European Central Bank came out and said that they'll be slowing down their interest rate hikes due to a global economic slowdown.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks.